Okay, good morning, folks, and welcome to another morning. Thank God for another morning. And what we're going to talk about today is, of course, the pre-market futures. A little bit of news, but uh, I really want to leave off with some analysis of Netflix as they reported earnings yesterday. All is not right with the world with Netflix. I'm not going to spend all too much time in their earnings report. That can be found online with a bunch of other videos and commentary. Where my strength is in the technical analysis and where I think we might be headed. And we're going to go over some member stock chart requests as well. So let me bring those up. Let's go to the pre-market futures first. Then we'll go to members chart requests. Excuse me. One of those mornings today, folks. Lots of coffee. And then we will leave off with the analysis of the Netflix. Okay. Members are up. Wow, a lot of them. I got a lot to go over here. Okay. All right, let's do this. All right, so pre-market futures. We'll come back to Netflix. NASDAQ 100. We'll begin with this here first. No deal. As of yet, supposedly they're still chatting. No deal yet. Futures down 1/4 percentage point on the NASDAQ 100. We're off the lows of the session. Let's clear all this off. Okay, good. Now, here's where the rubber meets the road. We have a couple of resistance levels above that will be a challenge. However, if we get a deal, if there's a 2 on that deal, meaning 2 trillion plus, not that it's the right thing for the economy or ethically for our children and our children's children and probably even their children, but being stone cold, good for the markets short term. That heroin will wear off, and we will find ourselves back in this very same position only a couple of months from now. But we will need more than 2 trillion to keep this party going. With every round of stimulus, you need more and more to keep it going for longer and longer. Wrong color. So the lows that we're holding at current and earlier in the week are the lows that we found, actually I should say support that we found, or a breakout point that we found on the 9th of October. Prior to that, it was resistance here and resistance here. So it's significant that we hold this. If we fail, well, I'll be looking to the short side yet again, the second time within the past 2 weeks that we will have been short of the market. Good morning, RL. I think they both need to deal, RL. It always strikes me, I should say it struck me as very, very odd that the talks were off and then Nancy Pelosi came back to the table, and I kept asking myself why, and I ran across a poll. I just Googled, is Congress in play? And it brought me up a set of polls that showed that Congress, meaning the House of Representatives, is in play, according to this one poll. And yeah, all these polls are biased in one way or the other. But I just found it interesting that, you always have to follow the motivation of people. And in her case, I think it's a matter of power, one. Two, is the fact that these states, California, New York in particular, are in a lot of trouble financially. For all intents and purposes, they're bankrupt. So they need a deal to keep their spending habits alive and well, at least for the short term. Then we're going to find ourselves right back here. This is all a complete catastrophe. No matter who wins, it's going to be a catastrophe. Very sad. Very, very sad to see. Never thought I would see it in my lifetime, but here we are. Central banking at its finest. All right, Russell 2000. We're consolidating within a wedge formation here. Looking okay. We're about flat on the session. New York, for all of Cuomo's faults, I think that he's more of a pragmatist and that he understands, looking at California, what's happening there, meaning people are leaving in droves, and they're doing so here as well in New York. Don't get me wrong. But the California way of doing business is just a catastrophe. I mean, it's worse than New York. And I think he's a bit more of a pragmatist in that he sees what's happening there with their taxation and businesses leaving. I can't see how we ignore that. And in fact, even New Jersey pulled back on they were going to charge a per trade tax on these high frequency traders. And their governor is out of Goldman Sachs. And he backed off of that. And New York was thinking about adopting it as well. I believe they backed off of it. Not 100% sure, but I would fact check me. But I'm sure, given the need for financial jobs here in New York State, I couldn't imagine them executing on that taxation. Let's go to the S&P 500. The S&P's about flat. Not much going on here. We're in wait and see mode at current. So let's go to the US dollar, gold, and then we're going to talk about members chart requests. Dollar looking for support here. This bar just opened up on a 4-hour chart 24 minutes ago. We are up at current, holding support. We overshot to the downside, rallied off of 92.70 on the Dixie. It's holding. Let's see what's going on in the gold markets. Gold up, no breakout yet. I think we're getting a breakout fairly soon on gold. So we lightened up on our gold mining trade not too long ago, booking profits in anticipation of at least a shallow correction, which we got. Now it's time to revisit, reload, and look for that next leg up higher. Let's go to chart requests. I'm not going to be able to take too many from the audience today, if at all. I'm running light on time. Members, I'm going to go through all yours. Okay, Zoom. This is closing price action. I'm going to assume that there was no after hours action yesterday. It's earnings season. Okay. Not much going on there. Zoom weekly chart. So far this week, we have a bearish key reversal bar. We have support here. $5.32 per share. We're just shy of it at current daily chart. Yeah, $5.32 per share is the price to watch on Zoom. Given this topping action, then a subsequent follow through to the downside, I think that we could break here and overshoot. If you're looking for an entry point, given the fact that we closed at the lows of the day yesterday, there's a high probability that we move lower. And I'm not saying the stock is broken. I'm just saying that the probabilities are that we move lower here and we may overshoot. So if you're looking for a better risk-reward entry point, I like down here better at 506.64, give or take a few dimes. We'll create an alert on Zoom. Possible swing, trade, bounce. These high-flying COVID stocks, I'm growing more and more cold on of late. Especially QQQ names. So Eric is looking to short it. I see. Okay, so looking for a short trade. I think what you would need to see on Zoom is this. I would go to a 2-hour chart. I don't think you could short it here. I think you need to see this support level hold or this support level hold, then a rally back. Then the question is, do we put in a lower high? If we appear poised to put in a lower high and the market's weaken up, I would put on a speculative short trade with a stop loss right below prior highs. Then as we begin to roll over and weaken up, I would then lean into the short side on Zoom. Where are our Stokes? Yeah, we're coming back further here. If you put a short trade on at a new daily low, expect to bounce off of the rising 20-period moving average, which is going to coincide with that second support level at around 506 per share. Did I say 502 or 506 per share? Let me go back. $506. That's what I would do from a risk-reward perspective. Now, the weekly chart, you can see a double top on RSI. It's not a broken stock yet. It's not a stock that's screaming short me. So I'd be very careful here, very deliberate, and stay small on that opening position, especially if a deal gets reached. You're going to see these stocks get squeezed to death, meaning shorts. So just be careful. Next chart up. Sam. I'm just looking to see whether or not we have news out after hours. Doesn't appear that way. Good beer. It's sober October. I haven't had a beer in like, I don't know, month and a half, 2 months. All right, Sam. Let's go weekly first. Let's use our automated trend lines here. You can see we have support down here at 796 per share. Where do we close? $9.14 per share. What we need to do here is we need to see, well, we already did break it. What might happen? We broke support on a weekly time frame. The week is not over. couple of trading days left to go, which reminds me, tomorrow night, Thursday night, 6 p.m. Eastern Standard Time, we will be live. So join us 6 p.m. Eastern Standard Time. I'll send out an invite to those that want to join in. If you want to get an invite 15 minutes prior to us going live, use that link below, the 15-minute alert, and you will be so advised. If you're already on an email list, do not enter your email address again because you get 2 emails, and I don't want you to get spammed. You'll be ticked at me. All right, so we're trading down below support. The week is not over yet. This is not in the books. We could rally back, close it back above support. We don't want to use the weekly time frame to time a buy or a sell at current. Daily time frame, a bit different in that we closed out the day yesterday down below support. Let's call it 907 is support. We have a volume shelf down here. That should act as support. It did act as resistance back here, support here. We may bounce off of this level. I predict that we will bounce off of this level. But as I always like to say, on that bounce, the test is always at the top. Do we break out or do we fail? Do we put in a lower high and break down to new lower lows? That's the big question. So just be careful. If you buy it at support, which is fine, I would be okay with that. Ideally, you get an overshoot to the downside, then a rally back. Let's set up an alert here. I'm writing a book here for a reason. 90. Let's call it 907 per share. We're looking for a close back above it. So an overshoot to the downside, bouncing off of this volume shelf, closing back above 906.70 to 907 per share. That, to me, would be a buy signal. But again, do we break out on that rally if we do, in fact, see one, or do we put in a lower high and roll over? So that question there determines whether or not you're an investor or short-term swing trader. Microsoft. At current, a short of a lifetime Microsoft. But we're not there yet. And for those not familiar with my want to short Amazon, quick chart, we won't spend much time here. We have an RSI bubble on Microsoft. A monthly chart, let's go to the quarterly chart. Quarterly chart RSI 92.59. Monthly chart, a yearly chart. Again, early morning, second cup of coffee, need more. 93.60 on the yearly chart, trading above its third standard deviation Bollinger Band in red. For those new, not familiar with the third standard deviation Bollinger Band, us trading above it and the significance, I'll save you the technical jargon. We're not supposed to be there. Now, that being said, with all of my doom and gloom speculation on a quarterly and yearly basis, is it time to go shorting Microsoft? No, not yet. We never take an indicator, RSI in particular. Stokes, I might more frequently when certain criteria are met. An RSI only on extreme overbought, oversold levels is really trade using the indicator. but always in conjunction with candlestick price action. Now, right here, right now, we're seeing very, very firm support for Microsoft. This can't be ignored. As much as I see, it's like a diamond jig to a barracuda. I see RSI on a quarterly basis, yearly basis, trading above the 90 level on RSI and above the third standard deviation Bollinger Band on a yearly basis. I want to short the heck out of it. But we need to pull back, take a deep breath, and say, is our timing accurate? Because being too early is akin to being wrong. So is it time? Not according to the monthly chart. Monthly chart still looks pretty healthy. We are holding to 204.40 the share. We are up on the month. Let's do a deeper dive. Weekly chart. We are inside of a triangle formation. The center line of that formation is 216.08. We bounced off of the lower band of support, or the lower band of the triangle formation on a weekly time frame, I believe yesterday. We'll confirm that in a moment. We attempted to break out earlier this week. We failed. We have a potential lower high forming, but we've been there before. You saw it back here. Lower high, but what do? Pulled back, broke out to new all-time highs. So we need for the event to occur, meaning we need to see a break of support. And ideally, a break of these support levels down here. That's your confirmation that you have a lower high, and now that you're breaking down to new lower lows, a confirmation breakdown on Microsoft, then the dominoes begin to fall. But we may not be there yet. We need to be very, very open-minded. We're at very strong support here. This is not a short. If anything, despite the fact what my observations were on a quarterly and yearly time frame, Microsoft is more of a buy than it is a sell. I would use right here, right now, is a fairly good entry point. But if we begin to break down below the lows of October the 9th, where we saw a low of 211.23, then you need to think about stopping out of the trade, especially if we break down below let's call it 205 per share. Then the algos start picking up on the lower highs, lower lows, and the pressure begins to the downside. SOXL. We'll use a weekly time frame. We are barely holding on to support on a weekly time frame. Bearish key reversal, second consecutive down week. We did manage to put in a new higher high last week. 811, let's call it 811.50 is resistance. Yesterday's lows, 297.65 support, daily chart. On a daily time frame, we broke support yesterday. This is looking not too good. I don't think it's a short quite yet. No. Take a look at your volume. Volume is declining sequentially, meaning down volume. I wouldn't go shorting this quite yet. If we begin to break down below the lows of the October the 15th, at 293.63, then you would consider opening up a short position. We're not there yet. We're at the precipice. I mean, this entire market at current is at the precipice of a major sell-off. But we're not there yet. The cemetery is riddled with shorts that are way too early to the game. So I don't want to be a doom and gloomer here. Not with the potential of a headline positive to the markets being unraveled at any given time. So I would be very, very deliberate with opening up short positions. If you open up long positions, use stops below the prior lows. Stick with it. Remember what happened here back in February. We were short of Amazon back here. I was warning, get ready for supply chain shock. Boom. All right, Corey, SOXL and SMH should look the same. Yeah, they pretty much look the same, brother. Except SMH was up yesterday, holding 185. And it was up on fairly decent volume. So the SOXL is a leveraged ETF. Far more volatile. I don't know what the mix is here of companies and what their weighting is. But apparently that mix did less in terms of performance yesterday than the semi-holders. But the same holds true. You know, you could buy this here at where we closed yesterday, but you need to use a stop right below the lows of the 15th. So very similar charts. The one big caveat here relative to the SOXL is that volume rose. Now, this is not, again, not a leveraged ETF, not a trading vehicle as much as the SOXL because it doesn't have the volatility. I would side, if I were looking for a true chart on how the health of the semiconductor sector is doing, I would use the SMH over the SOXL because it is a trading vehicle. Traders want that 3x volatility. LAC, Nestor, LAC. Oh, Lithium America. He's hot on this. Been asking me about this. Okay. Let's come back to the daily chart. Let's do a pulse check, higher level view. How's our trend? How's the macro picture? You could see here that we have a couple of volume shelves above, acting as resistance. We're off the highs of the week. We're holding 1208 per share. We technically have broken out on the week. We're above resistance at current, but a lot of selling off the highs thus far this week. Daily chart. Yesterday, bearish reversal bar. This is one where I would adopt a hard and fast and tried and true method of waiting to the final hour of trade. See whether or not this support level at 1208 holds. If we overshoot, close back above it, meaning overshoot to the downside, rally back, close back above it, then I would be a buyer of LAC because you do have a weekly breakout, but we need to see a reversal day to close at or near the highs of the session. Otherwise, I would sit, watch, and wait. No reason to get involved with it or to add to it. I'm seeing something interesting potentially on the RSI. Let's go to oh, this is not good. This is where my Stokes come in. I have a rule. I don't buy stocks when they're declining. I don't care if it's a commodity, stock, index. When Stokes are down below 50 and declining, rallies fade. That's the rule, and tried and true. I see it all the time. What happened here? Rally faded. The 16th. What happened here? The 19th, rally faded. What happened yesterday? Rally faded. This has to get resolved. These Stokes need to hook back up. Even if they flatten out down below 50, they're still suspect. So I would avoid until these Stokes are resolved. I would avoid. Nestor. Let's revisit it in a couple of days. If it holds support, doesn't break down to new lows, all is right with the world. No rush here as we continue to see fades. All right, let's go to our chart of Larry. Good morning to you. Oh, thank you, Larry. A little bit too long, no? Give me your thoughts on that. I'm thinking about taking it down and chopping it up into smaller videos. If I'm wrong, I would appreciate the feedback on it. What do you think? Because I'm overly critical. Okay, so let's talk about Netflix. Max, I only have time today to go over members chart requests and do an analysis of Netflix. So my apologies. I won't be able to get to that request today. Jamel, sorry. Same with you as well. All right, I'm on a tight time frame. I had to get to members, and I need to get to Netflix. So let's do this. If you want to join us tomorrow night, Thursday night, Futures Live, I'll be sure to get to them. I don't mean to dismiss you at all, but time constraints. All right, Netflix reported after hours yesterday. I'm not going to spend a tremendous amount of time about the whys behind their earnings. The market's telling us that they didn't like it. Yes, cut a couple of minutes off the video. All right, thank you for that, Larry. We have a subscriber miss. Hey, Sam. We have a subscriber miss. Guidance miss. And, I didn't see that show that they put out, Cuties, and nor do I intend to. But that was horrible, horrible, horrible PR. And I don't know what they've decided to do with that, but that needs to get addressed. So I don't know whether they've done a little bit of damage to the brand here. I'm sure it's repairable, but the reality is fact. I can only speculate about the whys behind subscriber growth. They missed. Whether or not COVID pulled those subscribers forward, maybe. Let's go to the chart. Netflix needs to evolve for the stock to continue its stellar run, says Gene Munster. I'm not going to go through his analysis. I want to see if I can pick up on what they need to do here. I'll come back to this. I don't want to waste everybody's time. Let's talk support levels. That's what everybody's really interested in here. So let's go to the pre-market activity on Netflix. Netflix is at current $4.99. They tried to rally it earlier in the overnight session, but no bueno. Now we bounced to a low of 486.50 on the news. This is a 4-hour chart. We have RSI with a 30 handle. The question is this a dead cat bounce? I would have to speculate that in all probability it is. But we don't want to commit to that quite yet. I'll commit a bit further once we take a look at the higher level view charts. What does 486, which marks the lows of the overnight section, represent on a longer term time frame? Do we have a tremendous amount of buyers at that support level of like mind to keep a bid under the shares and hold that support level? We don't know. Way too early to make that call. So if I had to look at this chart right here, right now, and say buy Netflix, no, I don't have enough data. Now let's pull back, take a look at the higher level view charts. Let's go monthly first, real high level, and see what signals, if any, the market has been sending us. And the market has been speaking loud and clear for months, ever since July. We have seen a tremendous number of topping tails, wicks, shadows, whatever you want to call them. We're in a triangle formation. The low of that triangle formation is the low of the month, which is 501.70. At current in the pre-market, we are down below that mark by about $1 or so. Now, support below that mark is at around $5.92 per share to $5.93. We overshot overnight below that support level, or after hours, I should say, and we bounced. The after hours low is 486.50. Let's do a deeper dive here. In fact, before we leave the monthly chart, let's overlay automated trend lines. This is TrendSpider. There's a link below, 35% off if you want automated technical analysis. All right, let's see what they picked up here. Rising lower band of support, which is at current at around 492 per share. Let's create an alert. In fact, I want to know if we break through. If we break through the support level, all hell's going to break loose on Netflix. It becomes a short. Weekly chart. $5.10 to $5.11 is critical support. We are down below there at current. We have a 4 handle at last look. Again, here's our support level down here. Our alert is set. Daily chart. This is old data here. Remember, we're down in the pre-market. So we bounced off of support yesterday. We are now right at the support level down here. So if we fail to close above 501.50 today, this stock has a lot of problems. I mean, the horse is out of the barn right now. It's not a short because you have a couple of support levels below. They're going to try to defend it. But on any rally back, watch for your lower high, then watch for those support levels to get breached again. Then the stock is in a lot of trouble. I want to go over to stockcharts.com. I want to check out the Stokes and where we're at. Keep this active for a few days. Okay. We'll revisit this. Let's go to yeah. So this is what I was worried about. These Stokes are going to be well down below the 50 mark. I wouldn't touch this stock unless it was an oversold intraday swing trade. And I planned on getting in and getting out on an oversold basis. I would not buy this carried overnight. I would not buy the rally because that rally is probably going to fade. That dead cat bounce that I predicted this morning, or I was speculating on, I think this might continue into the morning, especially if there's news out of Washington on a deal. But that rally is ultimately going to fail, and we're going to head down to lower lows. So be careful here on Netflix. The technicals are setting up poorly, not just simply on an intraday basis. We're not relying upon that, but on a daily time frame. And we know on a monthly time frame that we have a lot of resistance above that 572 mark. We also put in a lower high versus the 575 mark. Let's bring up a weekly chart here really quick. This better illustrates, do we have, and this is the question that must be asked, do we have a lower high? Are we, in fact, I can answer the question, we have failed. We have failed a breakout here. Let's bring up my Netflix weekly time frame. Let's update this so I can illustrate what I'm talking about. Okay. So I'm making the assumption that we're going to close below 520 per share. It's a fairly safe assumption, but a lot can happen, and we want to be open-minded, as we always are, that maybe there's a deal and we close out the week above 520. Let's make the assumption that we do not. Well, the problem is with that, going into next week, is that we had seen a breakout the week of October the 5th. That breakout, if we fail to close above 520 per share, has failed. That's a breakout point failure. Call it a bull trap, call it what you will. It's bearish. And we have a lower high. And as we begin to break down to new lower lows, which we already have intra-period overnight, we can't put our nickel down and say, okay, that's it for Netflix. We need to see what the normal trading hour traders do, because you have far more volume. Let's see whether or not they break these support levels. And when it's all over for Netflix, is a close below 466.50 per share. That would be a mark of a lower high, and then a confirmation breakdown below a lower low. And that is it. Yeah, I already spoke about the dollar, Sam. 4-hour time frame. It's rallying off the lows of the session at last look. So wrapping up with Netflix, we'll go to the dollar here. Wrapping up with Netflix, I would avoid, sit on your hands. Don't speculate that we've seen a bottom. This is the buying opportunity. The technicals from a higher level perspective are not good. And the market's been telling you that for a couple of weeks now. The dollar was rallying back. Now it's fading. Let's see what gold is doing. We'll wrap it up with gold. Good morning, Nadia. Gold on the precipice of a breakout. I keep saying precipice. I know that. I always said it right. I can never get that word right, except when I do it by accident. Precipice. There we go. Precipice. All right. Looks like we're on the verge of a breakout here on gold. Bullish, like the gold miners. Folks, that's it for this morning. Everybody have a profitable trading day. Smash that like button. And don't forget, join us tomorrow night, Thursday night Stock Charts Live, 6 p.m. Eastern Standard Time. Have a great day, profitable day. Be well.